these stocks I'm going to share with you in order that I like the most for the next 4 months into year end. This does not mean I like these stocks in this order or the most the long term. Like my long term list might be a little bit different of me thinking about which stocks have the best 3-year returns, 5-year returns, 7-year return profiles, right? This is just looking at it from kind of into year end. Here's my opinion. The stock I like the most into year end is FuboTV from the small cap stocks. And the reason I like this one the most is this one has the most catch up to do here. They have the most, I think, positive momentum going for them when we're talking about obviously the lawsuit situation going in their direction. That's huge. Additionally, we have a business that's bringing down their losses substantially, right? While increasing their revenue and their subscribers. That all bodes very well for the company. So we kind of got a boogeyman out of the way in regards to the Venu service. And now it's looking more and more like Fubo set up very well here. If they come in their next quarter, report good subscriber growth, good revenue growth, but that bottom line loss gets brought down a lot. They keep reconfirming 2025, getting to some profitable quarters in that year. You're going to completely take bankruptcy off the risk. You'll see the stock fly to the moon over this next 4 or 5 months here. So obviously it's already started, massive move. It's already up about 55% in the past 5 days. So this one could get very, very, very fun into year end here. So that's my favorite pick when it comes to small cap stocks into year end. My second favorite pick from small caps into year end is the Planet, actually. The Planet, this is like super small cap. It's a 60-cent stock. I think this one's going to perform tremendous into year end. Tremendous. Obviously, the scheduling of Jack Jackson into a different schedule is that process continues to go. That's going to help this company immensely. The 280E changes going to help this company immensely. And I don't think people are ready for the growth rates the Planet's going to start putting up as soon as this upcoming quarter, which will be announced in probably 2 months from now or so. Probably 2 months-ish. I don't think people are at all ready for the type of growth rates this company's going to start putting up. Plus, the margins are getting better. That bottom line is going to start to fix itself in a massive way. Whew. Yeah. I really don't think people are ready for that one. I really don't think people are ready. So the Planet, I love the setup into year end for the Planet. That might be my favorite of them long term. Kind of seeing what I'm seeing from that Vegas location and how much traffic, I see traffic increasing. Jeez. No, my third favorite pick as far as these stocks go, these small cap stocks go into year end is the Honest Company. So Honest Company sets up very well into year end as well. This one has a lot of momentum behind it. It's a stock that a lot of people want to get in now. And the reason being is they're flipping over to that profitability side. They're starting to cash flow, right? The revenues are trending much better than anybody anticipated. It's clearly Carla, the new CEO at the company, as well as Kate Barton and these other folks, right? Dave Loretta. They all have the company pointing in the right direction, which is going to attract a lot more people that like to be in a stock like this. And the more folks are going to be attracted because they're going to say, okay, this is a name that has major EPS upside over the coming years, likely, major revenue upside over the coming years, likely, right? And they're in what would be seen as a pretty stable business model, right? Diapers, wipes, beauty products, lotions, soaps, all those sorts of things. Like that's kind of what people would look at as like a recession-proof business. And you'd think their business would be devastated over the past few years with how hard inflation's hit people and the fact that this is a higher priced product. And it's just, we've seen their numbers get better and better. So that's why the stock's up 227% in the past year. And I think it's going to remain in favor. So those are my 3 favorite stocks, just to be quite frank, when it comes to small cap stocks into year end. They all set up very, very well. So love that there. Hey, it's Jeremy. I hope you really enjoyed watching that clip here today. What you're looking at in front of you right there, that's 1000xstocks.com. That's my advanced software that I've been working in the background creating for a long time. This software is so much more advanced than what others are presenting out there in the market. And as somebody that's been in the market 15 years, I want to create something that was simple, that had exactly everything I needed to make my judgments on companies, such as forward P ratios, 2-year out forward P ratios, price to sales ratios, forward price to sales ratios. I wanted the ability to be able to compare different companies versus each other. I wanted to be able to compare a Meta versus a Google versus an Apple and be able to see all those different metrics laid out all next to each other. I wanted a service that I could listen to conference calls right through and even be able to toggle and adjust the speed I wanted to listen to those conference calls. I wanted a service that I could search SEC filings right through. I wanted the ability to do that all all in one service, and that is exactly what I've created with 1000xstocks.com. If you want to apply for access to this, go to the description area of this video. You can click that link and go ahead and apply for access to this. If you don't want to do that, you can go to 1000xstocks.com. Enjoy. Let's go ahead, let's jump into Fubo now, which this stock is starting to skyrocket up. So let's go ahead and react to this.
Here. Now, there was one analyst, Laura Martin of Needham, who says that the injunction has a 75% chance of killing off Venu. What do you think?
What do I think? Thank you for asking me that, ma'am. I would say my personal opinion is this is like a 90 to 95% chance of killing off Venu. And the reason being is you got to understand the way the legal system works. Now this is going to go to another court. That judge did a phenomenal job of getting as much relevant information from everybody she needed. So she could just kind of like wrap this up. And when they take it to another court now, and try to appeal this, if they do, which, by the way, a lot of people are assuming they're going to appeal. We don't even know if that's going to happen. But let's say they do actually go through it with an appeal process. Good luck. Good luck getting this overturned. Given how professionally this federal judge took this and all the information she took, the testimony, all that, to get this overturned now, I'm just saying that's going to be difficult. Extremely difficult to get this overturned. So my personal opinion is this is like a 90-95% killer for Venu. And the same way if Fubo had lost that, I would say it was an extremely low probability Fubo would then be able to take it to another court and win because of how well that judge did in everything.
I think, from my perspective, the most important thing is that the consumer is the big winner today. The joint venture attempted to deprive consumers of choice and affordability. It attempted to eliminate competition and manipulate pricing. And I think the evidence was quite clear, given that the bar is so high, and we're just happy the judge has agreed with us.
So it's likely that Venu will make its case again before the court. What are you going to be doing before then? Because it's not clear how long this injunction will last.
Well, we don't have a date yet set for the trial, which could be in 2025 or 2026. Fubo today is focused on the fall sports calendar. We're not focused on any potential appeal. Pun intended, ball is in their court.
Keyword potential appeal. We don't even know if Venu's going to try to appeal this, to be quite honest. I mean, they could, but it's going to cost a lot of money, right? And who's going to pay that money? Well, it's going to have to be all three sides, Disney, Fox, Warner Brothers. Let's say one of the sides doesn't want to appeal it. They're like, listen, we lost, this isn't going to work out. Then what are the other two going to front the money for all the legal fees to probably not win that as well, right? I don't know about that. So remember, there's no such thing as a free lunch. So if they want to spend a ton more in legal fees, it's coming out of somebody's pocket here. There's no such thing as a free lunch.
So we'll continue to focus on our business and continue to achieve profitability as we have forecasted in 2025.
I am curious, David, too, about the structure.
I love how they keep doubling down, tripling down on the profitability for 2025 because that's what I want to hear. As a Fubo shareholder, this is what I want to hear. It's clear as day they're bringing down those losses quarter after quarter after quarter after quarter. And it's great to see, but we also love to see not only the numbers, but then that verbal confirmation from the management team of focusing on getting to profitability in 2025. That's because let's be honest, why did Fubo go down to $1? Why did it go down to $1? A very simple question. There's one reason and one reason only. People thought Fubo was going to go bankrupt. That's why. That's the only way you go down to become $1 stock or below is if people think you're going to bankruptcy, right? Now that Venu can't launch, right? Now this makes a situation where the chances already go down substantially. Now with Fubo getting closer and closer to profitability, that takes your chances of going BK down substantially. So the two main factors you had are both looking like they're going away. Venu, which was a scary, what's going to happen here, right? And then additionally, the losses. are all getting brought down. So what do you have left at that point in time? Then you don't have anything. So then you end up like an honest stock, right? Which honest stock got all the way down to $1. People thought bankruptcy. That went away, and over the next year it went to $4. It's a scary thing investing in companies that, there's a decent probability it could go BK. But when you find one of these companies and they don't, and they make it out to the other side, the money's different. It's like you get your 5x, 10x, 20x, 30x your money in not a long amount of time. Look at Carvana, for instance. It's a 3,000% gainer in less than 2 years. Less than 2 years. People can't make 3,000% over their entire life, right? Wow. Incredible.
That Venu deal, there was some discussion, I guess, based on the reporting coming out of the hearings that led up to the ruling. This idea that they were asking, I don't know if it was specifically you, but they were asking some of the rivals that they would, in addition, if they wanted the sports programming, they also had to take additional programming as well. Is that true?
Yeah, that's correct. I think one of the arguments that we were attempting to make is that not only were there excessive above market rates that we were dealing with, excessive penetration rates, which is the number of subscribers that gain access or have access to each of the networks, which obviously comes at a higher cost. But it's also the bundling of unwanted channels to access must-have sports programming. Those are the...
Let me answer a very important thing before we go further here with David Gandler, because I got to get this one off my mind, because I have heard some people say it. Not very many people, but a few people said, and I'm like, I don't think they understand how the legal system works or all those sorts of things. So some people were saying, since Fubo did this and they sued, Warner Brothers, Fox, Disney, ESPN, right? Okay, those companies should then just refuse to give any content to Fubo, right? Would that not be collusion? You think that's going to be a good look for those companies? They were going to say, you know what, Fubo, we're not giving you any rights to ESPN or any of this stuff anymore. We're going to charge you such an insane rate. It's ridiculous, right? They could do that, and they're going to end up in probably a way bigger lawsuit than what they're in right now, right? That's going to be a really, really bad look if they're holding out from other companies. And remember, this is a different industry. This is an industry that's seen as kind of more like people should have rights and access to sports programming, right? And so it's seen more as a right of the people. It's not like it's some, niche kind of thing. Like the football game's a big deal all around the United States of America. So to in any way impact, so a lot more people couldn't see that or do any sort of collusion would be, I'm just telling you, you would end up in a way bigger lawsuit for those companies in that sort of situation. So wouldn't be an intelligent decision for them to go that sort of route, because Fubo is going to come suing left and right, and they're going to have more ammo than ever. So that would be ugly.
Of unwanted channels to access must-have sports programming. Those are the sort of key elements of the trial. And again, we believe that we're able to provide the judge with sufficient and credible evidence for her to judge in our favor.
I'm just going to play devil's advocate for a second, David, because when we look at sort of the legacy cable TV bundles, there was sort of baked into that almost a certain degree of exclusivity, a certain degree of you come to us or you don't get it at all. And obviously they're trying to extend that to a certain extent to the streaming side. Right. But if that was okay then, and I'm just talking legally okay, I know consumers hated it, but if that was okay then, why is this not okay now if it's simply because it's online?
Well, it's not that simple, and it's not because it's online. The problem is that we have attempted to put together a skinny bundle of channels to offer to consumers since 2015. And at every turn, we have been denied the opportunity to do that. And in this last negotiation with Warner Brothers Discovery, we asked for the same terms as this joint venture was able to receive. And obviously, we don't have a deal with Turner TBS, nor do we have a deal with Warner Brothers Discovery. So really, this is about keeping it for themselves and not creating enough access across the ecosystem.
Exactly. And from my understanding, these guys actually made a big screw up. When I say these guys, I'm talking about the Disney, Warner Brothers, Fox side from the legal side. Because I believe there's something that they said when they were kind of going through this trial around, well, if these guys want access, they could just, ask for access to doing some sort of sports-related bundle, skinny bundle, blah, 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 right? Whew. Okay, now you open up the door. So now that you said that, now you actually have to do it. Fubo says since 2015, according to David Gandler, they've been trying to do something like this, and they haven't been able to. Well, now if those guys said, oh, well, all they have to do is ask, we can do something like that. Oh, boy. Now you open up the door. So now Fubo might, in the next year or two, be able to actually launch a product similar to the Venu, which could be a $50 under package with just sports-related channels, right? Now what you're going to do, you're going to try to block that, right? You could try to block that. You're going to probably end up in another dang lawsuit. So, these guys made a lot of mistakes they made a lot of mistakes on the legal side. And I think any good top-tier lawyer could break this down and be like, yeah, they made a lot of mistakes on that side. It's incredible.
To be clear, David, why didn't they take, if you said you offered the terms that they were asking for, do you have any sense that they articulate why they didn't take it?
Well, again, I think you said it very well. They sell the complete bundle. They want to package in channels that are difficult for them to sell individually or separate from sports programming. And I believe that there's been sufficient evidence, and perhaps some of that information has been unsealed, that they feel that they have significant leverage over a distributor when they're able to package together the sports programming.
So give us a sense of what you're thinking in terms of what Fubo does next, its next iteration. Is there a future in which Fubo only offers perhaps a sports-only package as well?
Yeah, well, I think the key word is as well. I think the idea for us is we're continuing to focus on our super aggregation strategy. We want to be able to attract customers at different price points across the demand curve, everything from, free services all the way up. I'll call it the fat bundle, as we called it throughout the trial, which is a more expensive, $80, $85 plus package. But there's a whole set of content packages that we feel that we can offer from zero to the fat bundle that we think consumers will really take advantage of. And they may take advantage of it at different times throughout the year, given what premium programming is available on a seasonal basis. So there's a huge opportunity here, and we're not in the App Store business, we're in the super aggregation business.
Have you had any talks, David, about adding, say, Disney Plus or Max to your streaming offering, to those fatter bundles or fat bundles, or is that pretty much a non-starter right now?
Well, we've obviously have asked in the past. I'm sure other distributors have probably asked for that as well. At this point in time, I think that they were not ready to do that, and our backs were against the wall. And, in a situation where we feel that the U.S. consumer will suffer from a lack of competition and affordability, because over time, I'm sure you've seen this, prices continue to move higher. Frankly, the Disney Plus product, I think, has doubled in price over the last 4 years. So there's a clear example and many examples of prices going higher when there's just not enough distribution.
100%. And, it's interesting. Some people, as far as the David Gandler, hearing David Gandler talk, right? Some people are like, why doesn't he talk more excited and this and that? Well, to be quite frank, David Gandler's more of a lawyery type guy, I would say. And those folks don't talk like, like, I don't know, super happy and excited and all these sorts of things, right? And so he's in a brutal industry, which takes brutal negotiations. You got to understand, a company like Fubo's always having to try to negotiate with all these different companies, right? And do these deals, and it's a brutal business, and it's filled with negotiations constantly. And if it goes, if certain things happen, you have to take it to the legal side, right? And so, brutal industry, and just, I think when you're in that sort of industry, you're not going to be the most excited, happy guy. That's all I'm going to say about that. It's a brutal industry, because we know Disney wants top dollar for all their stuff. Then they're going to try to hold back stuff from you. We know Fox is going to do that. Warner Brothers is going to do that. It's brutal, man.